Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, and it's March 8th. Hey, we got one item on the docket today, and that is the weekly jobless claims. Of course, these are for last week. So, the previous week we had a reporting of 210,000 jobless claims, and that was the lowest we had since 1969. So, of course, forecast for this week it was supposed to go up to 220, but we went up 21,000 instead of 10,000 to 231,000. Still a very good number here. Now, remember, tomorrow we got the Bureau of Labor Statistics (BLS's) jobs data that's going to come in tomorrow. Uh, this is kind of what started the whole, concern about inflation because if you recall, we got the earnings reports that came out. I mean, not earnings reports, but the wage income, and it kind of showed the largest increase that we've seen in a while for wages going up there. And we've been kind of seeing these going up over like 5% year over year. That wages are this is starting to become a trend, about 5% year over year, and it's starting to show a trend there. And this could definitely move the markets. So we'll touch on this a little bit again here, but just to give you a heads up, we are expecting a pretty strong jobs number tomorrow. Probably well over the 200,000 mark tomorrow here. So just be prepared for a lot of volatility, especially here in the bond market, and we'll kind of touch on that here in a little bit. Stock market, again, they were kind of spooked about inflation because they were concerned that the Fed will raise rates at a more rapid pace than initially thought, and they still may get spooked from that. So it depends on what kind of if they've changed their sentiment or not. So right now the stock market is up. Everything's going good. ECB had announced that they're going to keep their rates unchanged, so they didn't raise rates or drop rates. They're going to keep their quantitative easing going until September is what they announced. But what they did take out in that line item is the to possibly even raise or decrease or the purchases or terms of their purchase their bonds and everything like that or securities over there. So they did take that out. So it looks like that it's going to be by end of the year they'll probably stop with their purchases of those items that are quantitative easing. And as we're starting to see a lot more globally, central banks tightening up a little bit. Tariffs. So we could be seeing those later today. President Trump is supposed to be working on those, and they might be released later today. Now, one announcement was that there could be some easement or exemptions for our trading partners in Mexico and Canada on that, so that's kind of easing concerns. And of course, Europe yesterday said that they're looking at retaliating and having their own line item. So we could get a little trade war going on with Europe here. As Trump even mentioned earlier, if they retaliate, then he'll probably tariff the automobiles, the European automobiles that's been kind of flooding our market. So we could see a little bit of a trade war possibly with Europe. So just be prepared for some jitters on the markets here as we kind of work our way through these things. So let's go take a look at the bond market we were talking about. So we've been kind of sideways pattern here you can see here for a few days here. We got the ceiling here at the 25-day moving average. We got this floor support at the 101.891 here. Now, because we're in the sideways pattern, we got room to grow up, or improve, or we got a lot of room to even go down. Now, currently we started the morning off lower than where we left off yesterday, but currently we're up about 8 basis points from where we left off yesterday. From this point to this point, it's about 8 basis points. Now, with jobs numbers coming in tomorrow, I would suspect, especially if there's talk about inflation, we could see that potential for a big push. So it may be a negative here for the bond market. So we've had this long trend line going down this way, and this could be this slight break we had been having for a while, and we could see this drop down further. So just prepared for some volatility tomorrow if you're are in the middle of a transaction, whether it's refinance or purchase. You may want to kind of lock in here as rates may worsen tomorrow. That could be the breakthrough that we're looking for. And touch on here, here's the 10-year Treasury. That could be enough to push this above this level here at 2.908, and the next level would be at 3.04. So that would probably be the next level. So this could give us a little push above that level and keep us above and finally get us to that 3% that it's been working towards. Right now it's testing the 25-day moving average, but the 25-day moving average is a pretty tough bird here, and it's keeping it there. So, and with this rising up here, at some point it's going to go up there. So if this jobs number doesn't do it, something else in in the near future, maybe next week, could potentially do it as well. So just be very cautious here. Probably try lock in sooner than later, and protect yourself from rates getting worse here. All right, folks, that's going to pretty much wrap things up. If you guys want to get more data, just come over to Twitter. You can find me on my handle at Mike Bjork. Hope you guys enjoy the rest of your day. Thanks so much for watching. Let's look forward to see you guys tomorrow with the big jobs day numbers. All right, bye-bye.